All right, guys, welcome to this section. On the previous section, we were able to navigate around crypto exchanges, right? And we're able to handle that of centralized exchange and also decentralized exchange. So, this very moment, we are going to be considering how to use uh, okay, we are going to be considering some aspect of crypto like investing in crypto, uh, the different types of trading in crypto. Then we also look at how to use. Okay, we'll get to get some recommendations like some coaches, some communities, some platforms, programs, strategies, and associations that will actually give you let me say that'll put you ahead of, or that'll put you position you where to be able to maximize the whole crypto trading stuff, right? So to get started with trading crypto, we already talked about setting up your wallet, having your uh, account where you want to trade, which we've covered that, where we walked through creating account with centralized exchange, where we talked about KuCoin, Binance, Bybit. Then for the centralized wallet, that is more of a custodian wallet and non-custodian wallet. I did not use that because I didn't want to complicate things for us. So we have custodian wallet and we have non-custodian wallet, right? Those were the kind of wallet we created, that of the Phantom and Trust Wallet. Then the wallets created on centralized are more of custodian wallets. Then the non-custodian wallets are the ones we created. Then PancakeSwap and Jupiter, it's more of a decentralized exchange. Then Binance and KuCoin, Bybit are centralized. So these were what we actually looked at last time. So in terms of investing in crypto, there's a whole lot to actually consider in investing in crypto, right? So, first, if you are investing in crypto, it means you are allocating a particular capital into buying a digital asset with that expectation that it's going to give you return on investment over time, right? Just like unlike traditional investment where it is subjected to some form of regulatory stuff. Like we stated, if you deposit money in your bank account, there's no possibility that it's going to increase because it's not volatile. Neither does it come with return on investment, except your bank decide to be giving you little interest, right? But in crypto, you can invest in a crypto project and it has the potential to go up or go down, right? So your ability to invest well matters in what you will get. So there are a whole lot to actually consider before you invest. Number one is what you need to research and have due diligence about what you are investing into. So you don't just jump into a project because maybe someone made post about it or someone told you about it. You need to on your own consider this as something you can invest into before you go into it, right? So you need to learn factors such as project technology, the team behind the project, the potential of the project, competition, maybe regulatory landscape, community support to also evaluate its long-term visibility, right? So that you don't just jump into a project that doesn't have a community. Every crypto project has a community, except Bitcoin and Ethereum and their likes, right? But these other ones, most of the altcoins or shit coins or meme coins are more of they have community, right? So you get involved with them to know what they are doing before you can make your decision. Then you need to be able to tolerate risk, right? Risk tolerance is very important. It is very important in making your informed investment decisions. So you need to assess the risk factors such as the goals of the investment, the financial situation, the timing, the willingness to tolerate volatility. So this will help you to appropriate level of risk exposure to such investment. Now, someone told you that this particular coin is going to moon next week, and you know, yes, if this moon you are going to make money. Whatever you are allocating into that trade, you need to understand that what you are allocating is something that you can afford to lose. So you don't just jump into investing because you have money. You invest what you can lose. So if you have 1 million naira you want to invest, if you lose that 1 million naira, are you going to feel anything? Is it going to affect you? If it's going to affect you, then there's no point investing it. Even if it has the potential to give you times 1,000, you need to have it in mind that it is a risk reward investment. So you can either lose it or you gain something out of it. So that if it goes not, maybe you lose it, you not feel it. So you don't invest everything you have because you are looking for money. You invest what you can afford to lose, right? So what's the amount of money that you can risk, and if you lose it, you are not going to shake. If you lose it, it's not going to affect you. That's something to consider, right? Then we also have different investment strategies. We have long-term traders or trading. We have short-term trading. In terms of long-term investment strategies now, this is more like you are buying and holding a particular cryptocurrency for an extended period of time. For instance, there was a coin I held for more than, I think, 6 months or so, right? Still waiting, and there's a particular project I've been waiting for the past 1 year, right? These are all long-term projects. So if I invest in this project now today, does this project has the potential to give me return in the next 1 year, the next 6 months, in the next 2 years? These are all strategies. Some persons are still holding Bitcoin from 2009 or is it 2010 to date. Some persons are still holding Bitcoin to today. These are long-term form of investment because they have a long-term plan and they have a long-term foresight about the project. But when it comes to short-term trading strategies, this is more like buying and selling for a shorter time frame. Maybe you are buying today, you are selling maybe tomorrow, or selling next tomorrow, or selling next month, or a week after. And it also involves risk and reward. This thing, it's also part of it. These ones are more of they have higher volatility. They can jump up anytime, they can fall down anytime, right? They have potential for quick profits, and they need you to manage them actively. So portfolio management is very important in this. You need to manage it appropriately, right? Then when you talk about risk reward rewards of investing in cryptocurrency, when it comes to risk, every crypto investment comes with risk. And this risk are as a result of price volatility, regulatory uncertainty, maybe cyber security threats, market manipulation, maybe liquidity risk or project failure. There are some projects that they will launch today, they will fail to push. There are some projects that once you launch them today, maybe someone might maybe hack through, or there's a cyber security threat on them. It results to failure of the project, and these are all risk factors. Maybe someone decide to manipulate the market. Someone who has more money decide to manipulate the market. But earlier, after you jump into it, the person sold. Once the person sold, you are afraid of the sell. You want to sell your own. After selling your own, the person still buy back at the lower price. You decide to okay, someone has bought very huge. Let me go back. You go back. The person still sell on you. So this way, there is a market manipulation. The person that has higher capital, higher form of investment is manipulating the market, right? Then liquidity risk. The liquidity is what guarantees trading in every crypto project. So if there is no liquidity on a project, then it means that project cannot transact. It means there is no base capital. There is no form of money that people can transact with, right? So it is the liquidity that makes it monetary, or that makes it tradable. So if a dev or someone who owns a project can just wake up one day and remove the liquidity of the project, by removing it, you are losing everything. Like your money is going to be worthless, right? So these are also risk factors. So you need to stay informed about this market development so that you can take informed decisions, right? Then in terms of rewards, despite risk, cryptocurrency offers potential and significant rewards. So it makes more sense if you maybe you invest into high return projects, maybe you diversify your opportunities, you access innovative technology, participate in an emerging financial ecosystem, jump into projects like that, and before you know it, you'll be shocked, right? So in terms of project diversification, portfolio management, it makes more sense if you diversify your project, because maybe you have $1,000 you want to invest, you can invest $50 into different projects or $100 into different projects instead of putting everything in one project. Putting everything in one project and that project goes to dust, you are losing everything. But if you spread it, there's a possibility that you can get a one win out of them that will cover everything, or you can even win all, and there's still possibility of losing, or it depends on what you are investing into and how you have made your due diligence, right? Then portfolio management, this is very important. You need to regularly monitor and rebalance your portfolio to align with your investment goals and market conditions, right? So do you have plans to take profit when you get to ×2 of your portfolio? If you have plans of taking profit, once you see it, take profit, right? So these are very important factors in terms of investing in cryptocurrency. Then another aspect of cryptocurrency that we'll be considering is what? Cryptocurrency trading. Cryptocurrency trading. So we'll be looking into different types of trading, like technical analysis, fundamental analysis. Then maybe we'll just understand some little trading strategies, then risk management and trading psychology. But then before I go into that, I will talk about airdrops, right? Airdrops are very important. Airdrops are more of free projects you get, free allocations you get from projects, right? You get free allocations from projects and you start mining. You either mine or maybe you do some tax and you are being paid. So there are different airdrops happening. For instance, if you're able to follow up the Notcoin, you discover that we did a particular mining, which was Notcoin, right? So they are going to airdrop people, and there are also other projects that they will tell you, submit your wallet address, and they will airdrop you. Like this one, you can see, comment your Sol address below, that Solana address below, to get a chance to mogo with us. So if you check the comment section, you discover people are dropping their Solana address. Solana address, you will find it on your Phantom wallet, right? The Phantom wallet you create, if you drop it, you are going to see. So people are dropping their wallet so that they can get airdrops. So this way, you can get airdrops, and there are different other ways you can get airdrops. It is either through, look at this one, airdrops on Telegram, right? Can you see this is an airdrop this person is referring to? Notcoin will launch on the day of the Bitcoin halving. The following project were listed on Notcoin tax. Memfi Club, true. So these are different airdrops that you can participate, right? You can participate in airdrop like this. You can join this by clicking on this. It will take you to maybe the bot where you are going to start. If you click on start now, you discover enter the portal and fight ghost enemies. Can you see? If you click play and end, you are going to definitely launch into their web browser and you start whatever it is, right? You can start playing, but I'll come back. Let me come back. I'll click on how to play. Can you see? So you just follow up on whatever guidelines they give, and you start accumulating until it gets to that point where you have what it takes. Maybe once they start dropping like this one, we will ask to submit every information about our wallet, about whatever it is. And if I check my balance, you can see I have close to about I currently have close to 120,000 of this particular insect, right? At the end of the day, they will start airdrop, which is on the 15th. They're going to start distributing airdrop. Now, to get more, I will have to invite people to join, right? So I'm going to drop this one on the chat too. I'm going to drop this one on the chat too so that you can start mining or start participating in it, right? So airdrop is another way to make money in crypto, right? So I'm going to stop this video now. Once I stop the video, I'm going to drop the airdrop stuff. Then I also start the next aspect of the trading or the cryptocurrency course.